topic, and that's the money laundering topic. And Bruce, we'll start with you.
Okay. Yeah, we have some rules that we put in place to handle potential issues of money laundering. We always try to make sure that funds go back to the same source if transactions fall through. Now, sometimes domestically, if we know the parties that are involved and one aircraft falls through in a transaction and someone else is involved in it, we know all the players, we have moved funds from our company to another company for a transaction on a different aircraft. That happens very frequently in our industry. However, when funds are coming in from overseas, we won't apply that. We always send them back to the same source. In fact, a few years ago, we got involved in a transaction where an Asian company had everything checked out, the bank that they were using, the company, they had all the authorities, all the players checked out. The money arrived here in the US, and within a month or so, it was over $1 million. The transaction was canceled, and we were being asked to send it to another location in the United States. And it started to get a little suspicious at that time. And we insisted that the money go back to the same bank where it originated, same account. And there was quite a bit of resistance to that, which again, further, I guess when we talk about the smell test, it appeared that this might have been a situation involving money laundering. And so we did ultimately have them reset up the company and the accounts and everything else. One of the things we learned is that the originator of the party that was involved that sent the money over, they had actually rented a company temporarily. So everything checked out in the company, but they had just rented it temporarily, and they closed their accounts immediately after the funds arrived here in the US. So that's one of our rules, is always to make sure that the money goes back to the source, because we get deposits on transactions that sometimes sit there for months and they just never develop into a full-fledged transaction. We have to return the funds. It happens very frequently in our industry.
Okay. Lucy, how about you?
It's very similar, and as part of our processes and procedures that we have in place, we verify the source of the repayment of the transaction. We verify if we're sending funds to a particular party. We do a verbal verification. We know sometimes there can be fraud involved with emails, excuse me, going back and forth. So we do a verbal verification. When we're working with an escrow company, kind of going back to your original question, we do also ask for a copy of wire ticket confirmation for the funds that are going into escrow. We want to ensure that what was already communicated to us is in fact documented. And that does sometimes create 11th hour issues on some transactions where we may have been told that funds are coming from XYZ company, and then we get all of the information, we complete our due diligence, but then when we get the wire ticket confirmation, it actually came from ABC company. So now we have to get an understanding of that entity, the ownership structure of that party, and then complete our due diligence, and it may or may not hold up a particular closing. So ensuring that we have a clear understanding as part of our whole risk framework is important to us.
Okay, thank you. There's a question, and the question is everyone working together? Can't you help each other vet the parties to a transaction? And Bruce, I'll let you take that one.
Okay, we typically utilize our own KYC process. I guess to some extent, we rely on the banking sources that we know that they're doing it, but we typically don't share information with them as to what's happening. But we are utilizing our own KYC process, even though we're in an unregulated part of the industry. The escrow industry is not subject to the KYC requirements, but we do it anyway. And we do it for one of the reasons that Steve mentioned is the reputational risk. We don't want to wind up on the front page of the papers. The second reason why we do it is that we believe being self-regulating is probably the best defense to having a lot of regulations put in place. So we use a third party to do restricted party screening. The party we use looks far beyond OFAC restrictions. They look at databases from government agencies and governments all around the world, over 90 different lists or blacklists or restricted party lists. And we've automated our systems to make sure that when these parties get involved in a transaction, and it's just like Lucy suggested, that times money will be coming from one source, and then you get to the closing and it comes from multiple sources. Every time we add a party into our escrow process, it automatically sends it out for the restricted party screening. So that's how we manage that process.
Okay, Steve?
Yeah, you know, there's a couple things when we come out of this is we all have to do our own due diligence. We are in a regulated and legislated environment right now from a variety of regulatory agencies. And we have to go ahead and show that we have done what a prudent person would do as we try and work through the process. One of the red flags that we can run into from time to time is when an individual comes in very quickly and says, I'm ready to buy an aircraft, I need it right away, give me your wire information and I'll send you the purchase price before we've even negotiated anything. That's, Joe, you know what I'm talking about. And
I want a helicopter too.
Yes. Yes. So these are tough things. And that's one of the things why when we get involved, in the rare cases where we may look at an LOI, which we have moved away from, we take a very minimal amount of money in the LOI process until we can finish all of our due diligence and the KYC process, both from proprietary as well as purchase databases and investigatory services, but also utilizing some of the compliance group that we have here as well to go through from their side. And we do a fairly thorough vetting of anyone. So when that red flag comes in and someone says, I'm ready to buy, let me send you all the money, it gives us pause. But longer term, the key is we all are going to be required to show that we did our own due diligence, and that's why we have to do it. I will say from an OEM standpoint, when I have one of the institutions that are part of NAFA here coming in and saying they're providing financing, that does give me extra comfort. And of course, when we have a known and reputable broker and attorney involved, that also is giving us a tremendous amount of comfort as we walk through this. So this is a community that we're a part of. And I think most importantly, our reputations precede us as we walk into the transaction. And that's one of the reasons why we still have to do our own due diligence, because even though we respect and understand each other, we cannot rely on each other from a legal perspective. We have to do our own work.
Yeah. Okay, thank you. Joe?
Yeah, the community is a big piece of it. So to Bruce's point, we know that the escrow companies have a lot of safeguards in place. We know that the financial institutions have a lot of safeguards in place. We know that the OEMs have a lot of safeguards in place. So if those safeguards are in place, this industry, I mean, let's face it, this industry is an industry that's really matured to where things are done differently here, transacting business for the most part in the United States. It's matured to the point where, look at what IATA is trying to do, for instance, to self-regulate. You know, these things 30 years ago never would have taken place. So this is a maturing industry that these types of best practices are becoming more widespread, whether it's OEMs down to some of the smaller players in the industry.
Okay. Lucy, question for you. Do banks ever share information on the bad people out there?
Well, we can't. Of course, we have a regulatory requirement to send reporting based on whatever the issue is, but that's through the regulatory avenues, but definitely not information sharing with our business partners, including anyone here on the panel. But I agree with what was said about having some comfort based on certain parties that may be involved. But while we may get comfort in those parties, we do have to ensure that we are in compliance with the regs ourselves and complete our own due diligence.
Okay. And Merrick, your thoughts on this?
It is interesting listening to this, and Joe is right. It's a very mature industry. I will tell you, as an attorney involved in the closing of these transactions, where I have my spidey senses up the most and where I'm working most directly with clients in the trenches, I feel like is in the family office, high net worth individual area. You know, from a documentation perspective, a investment grade public company will beat you up on what's a default and reps and warranties, but they get all this stuff that we're talking about today. For them, it's just a part of doing business. A private company, probably, a little bit more sensitive about financial information, maybe don't understand our own as a financial institution duties of confidentiality. But when you start talking to high net worth individuals, this is a toy for them. They are very accustomed, particularly when it comes to dealing with their banks, getting what they want when they want it. And so that type of added pressure, I certainly feel on these transactions, that notion to move very quickly, just get it done with the snap of the finger. And of course, a relationship manager who feels like if they don't acquiesce to the demands, particularly the timing demands, that they'll see their customer walk out the door to another bank. So we're getting the pressure externally from the customer, but also internally as well from a banking representative. So, that's where you really do have to hold the line and make sure you're just taking a deep breath, slowing down, and not taking any shortcuts.
Great, thank you.